Hello, YouTube. Are the Bears about to make a big mistake? There is one pattern we're going to pay attention to this weekend. We're talking about our resistance going back more than a year to January 4th on our all-time high, where we've had 4 chances to break this downtrend or the 50 MA. And now on this last test, we are looking for a potential move higher. Again, if we can crack the downtrend and we go higher, that is implied by a high of the week close. We can also look here to a template on the E-mini futures for the last 2 days of trading. From Thursday, we got 1, 2, 3, 4, and then on the 5th try, we finally break higher. Note, the one part that is missing on the daily chart right now compared to this hourly chart is volume. So if we keep that in mind, and we now go back here to have a look at, we have a look here at our weekly chart. I think we have to be receptive to the idea that we could go higher. Why? When we close at the high of the week and we're close to the moving average, we have to really pay attention to that. Not only is this the first thing to look at, there's also the psychology where we're going through an emotional roller coaster where I think that people who are selling or shorting, even in the last couple of months going into the fizzled Santa rally, are saying, luckily I sold everything. It will still fall. And then what did I say? And I think right now we're here at about what is going on. I knew all along we would recover. Whatever, I will buy again. Anyway, it's cheaper than I bought last time. When I look here to the QQQ on the 1-day chart or SPY, I see the exact same pattern where we go sideways, we come down to form a W, and then we advance. What do we have here? We go sideways to come back down to form a W before we advance. That is really the shortest way for me to explain what's going on. So as we're getting started, I would really appreciate if you could take a moment to smash that thumbs up. And if you're enjoying the content, please consider subscribing to the channel. It would go a really long way to support me and the channel as well. So when we think about the psychology here, I'm noticing a lot of rumblings where people just don't really want to agree with this. So we look here to our poll that we do every week, and thank you to everyone who goes and completes it. 6 out of 10 people think that next week we're going to be down. As what? As we're closing at the high of the week. That's like really notable. We also look here to our CFTC short data where we've seen an increase of roughly 50,000 contracts from 167 to 213. And this is the first time we've been above 200,000 contracts short going back to December. So by closing at the high of the week and having a whole bunch of short positions added, what does that mean? It means they lost money. Everyone who bought this week closing at the high, they lost. So cool. As we're going into greed, and I think this greed component is really important because the people who are long are going to try to squeeze the people who are short. And when we look here to what this really means, it's that I think we might be repeating what I've been talking about for a few weeks now, where if we don't go red into the beginning of the year, 3 out of 4 times we go up green. So in hindsight, what will 2022 and 2023 have looked like? Please consider leaving me a comment to tell me what you think. I notice and appreciate every comment you guys put out. We did see a big tick down in CPI this week, so that is a large part of the reason why I think people are getting a little bit optimistic. And if you look forward here to 2 more quick charts to try to just get a grasp on why we could go higher, we look here to gold. And here we're looking at gold on a 1-week chart. And if we zoom out, we notice a red line, which goes all the way back to 2011 when we hit our previous all-time high. And now we've actually claimed it again on a closing basis above 1917 or that 2011 high. So is this going to lead to a W, which is going to drag us higher? There's two more charts I want to look at. Then we'll come back and look at the rest of the story. So the next chart I want to look at here is going to be Bitcoin, because when we look at that same area, now going back to, I believe, 2017, late 2017, 2018, what do we have? Oh my goodness. It is up by 21.5% on the week right now, and it's reclaimed that area. We have what? That same classic W getting formed, and now it is above. We will have a death cross, but I think the horizontal line back to roughly 20,000 is really important. If we zoom in to a 1-hour chart here on Bitcoin, look what happened. Pop, flag, pop, flag, pop, flag, just below 20K, and then pop. As what? As the cash market closed in the US, Bitcoin took a notable leg higher, popping up 5+%. We also see that increase in volume I talked about before. So gold looks like it wants to go. Bitcoin looks like it wants to go. Can the stock market go next? Let's look at a few more charts here, because I think it's important to understand the reason why all 3 of those asset classes are going up. Look at the dollar. We're now down by about 1.7%. We've stopped going up because we've lost our green uptrend. So that was support. We also had our previous resistance going back to 2017, that same area we just talked about on crypto. Oh no, that's right, December of 2016. Sorry, 2017, and going into 2018, the dollar peaked, and that led to a risk-on rally. I'm noticing that same formula so far. Is it confirmed? Well, let's see if we can blow out these lows at about 100, and then we have more of a head and shoulders pattern with some confirmation. We've already stopped going up. Now the question is, are we going sideways or are we going to go down? So with a dollar in focus, let's look at two more charts to get a little grasp here. VIX is down by 13.3%, down to 18. As a reminder, when we get down into the teens, it means that the market is calm, cool, collected. So it's not that there's been no volatility in this market. There's just not been that we are surprise volatility, like what happened in 2020, like what happened in 2018, or like what happened in 2015 here. Why? Well, because we've had a lot of lower bouts of volatility. In 2022, we had 1, 2, 3, 4, 5, 6 bouts of volatility. So those 6 combined might be more, might be less than having one huge upshot where we claim that 40 and we have a big increase in volatility. I just think people have kind of become gloom and doom, where the cup is half empty because we've been told that first quarters of the year is going to be hard, first half of the year is going to be hard, and we're probably due for more pain ahead. That's really what we have to pay attention to here, whether or not there's been enough pain forecasted ahead of time. When we look back here to the 2 and 10-year note, we also note that we've stopped going up because we've lost our uptrend, and we're probably going sideways here. We're closing the week down by about 0.4%, even though we did go up on Friday. So it's starting to look like a head and shoulders, but I would really just call this sideways action. Looking forward here to the 10-year note, down by 1.5% and throttling 3.5 or our previous top. So again, is this going to turn into a head and shoulders where we go lower and stocks go higher? Let's make sure we pay attention. All these things tell me that I need to be receptive to the idea that we could be going what? Higher. So let me just get my charts back here because I had a couple of lines I want to bring back here. And if we look a little bit more closely here, last weekend we talked about 348.50, which what is the 38% Fibonacci retracement, and we closed at 39850. So my Fibonacci level on a closing basis is off by 2 points. Sorry, 2 cents, not even 2 points. And if we hide everything, well, the next level of resistance is going to be here at about 404 or a 50 weekly, and then about 413. It's getting us awfully close to that 417 area where a new bull market would be confirmed by going 20% off the lows, and that is how we confirm a new bull market. We're also above 384, which means that technically we're not inside the bear market. 20% off the all-time highs gets us down here to 384, and we started to reclaim that area. So as we go forward here, I'm going to ask you one more time, please and thank you. If you could smash that thumbs up, I would really, really appreciate it. If you haven't already, please consider subscribing to the channel. We put out videos every single day other than Sundays, and we really appreciate your support. In terms of what we have to pay attention to this week, there are more things to focus on now that we got Jerome Powell's speech out. We got the CPI print. We're going to be focusing on other data from around the world. The GDP from China coming out on Monday. It's going to be a holiday in America, so pay attention to that. Industrial production. Then we got CPI coming out of Great Britain, CPI coming out of Canada, CPI coming out of Great Britain, CPI coming out of Europe, core retail sales, PPI, and then we got Christine Lagarde from the ECB speaking on Thursday, and we have initial jobless claims and also PMI index coming out. We have Christine Lagarde speaking again on Friday. We also have OPEX on Friday, or options expiry. So OPEX just means that there's going to be options expiry on a monthly basis, and there's been billions and billions and billions of dollars shorted, which means that the bears do not want to see us crack this downtrend in the 50 MA. The bulls do, and QQQ is where there's been a lot of focus on these been a lot of focus on these puts. Just catching my breath here. So same thing that's missing here. We're gonna have less volume, and with a shortened trading week, I'm not sure we're gonna get a big push in volume on a weekly close, but we did actually claim our 200 weekly moving average on a closing basis by, I think, about 20 cents here. 280.76. We closed at 280.97, about 20 cents, but we claimed it. And that's after spending 1, 2, 3, 4 weeks below. All right, really, really interesting. Let's look forward to 2 more things here on the economic calendar. I'm talking about FOMC meeting member speaking. On Tuesday, we've got, first one here on Tuesday, we've got right? Williams speaking. He is the New York Fed president. He is in the Troika. And he is probably one of, no, he is, not probably, he is one of Jerome Powell's closest allies, which means that he really leans into him for guidance, for making sure he controls the messaging. So he speaks on Tuesday. That's really interesting. Let's look at the next speaker here. We've got Harker, who was a known hawk on the Fed, and he dialed back to 25 basis points this week. And then additionally, we have Williams speaking again on Thursday. All right, we're going to note that Thursday date when we look at the earnings calendar in a moment. So we got Williams twice, and then we got Harker twice coming in on Friday as well. So what's so interesting is that we saw that financial conditions were starting to loosen. And let me just see if I have that screenshot here. Here we go. This was where I was focusing a lot on this week. The U.S. financial conditions finally eased for the first time since April. And with John Williams coming out to speak, I am going to be paying very close attention to what he says, because he's out there talking twice. And if he does not have the message he wants, or Jerome Powell wants to smooth things out to make sure the market is being led in the correct way, I believe that that's going to be John Williams and Hawker, because we look at Williams here, and he's actually now a little bit hawkish, but he's been a notable dove for a long time. He's voting every period. Then Harker here, he is not voting in 2022, but now he is voting in 2023, and he is one of the most hawkish members on the Fed, so I'm paying very close attention to him. As we shift gears here now, we're now going to look here to the earnings calendar, because with the Fed in focus on February 1st, we do have some other things to get through first here. I'm just noting that earnings have kicked off with banks on Friday. I'm looking to Netflix. And the reason why I'm looking to Netflix is because they're expecting a pretty strong beat, and because the FANG stocks still include Netflix. So if Netflix kicks off earnings in a positive way, which as of right now, we're getting a whisper number that they will, and then we have OPEX for big tech on Friday, that's really notable. After that, we've got Tesla, we've got Microsoft, and we've got Apple coming in on the 1st and 2nd, I believe. So Tesla on next Wednesday, they're expecting a miss. We also have Meta coming in and expecting a miss. And we have Amazon coming in also expecting a miss. So as of right now, we don't have the earnings for Apple or for Microsoft, or the two biggest companies in the market. But like here for Microsoft, let me just see if I can go back here and get it. Right, unconfirmed. I think it's just hard for them to get these numbers. Unconfirmed. We look here to, let me just see if I can actually pull it up here. I want to pull up Netflix. It's been a little bit slow to load the page. But let's see if we can get it. There we go. 67 cents over 45, or a beat of about 48%. So would that be received positively by the market, where maybe the market as a future discount mechanism is going to take what Netflix reports and say that maybe things aren't so bad? Maybe. Let's pay attention to it. I do think there is a much bigger hurdle for the rest of big tech, like Apple, Microsoft, Meta, Tesla, but that's a problem for next week. So if we're able to go higher, I'm really just paying attention to what Netflix does and the sentiment we get as a result of that. So let's go back here to our S&P chart on the 1 week and just try to understand that if we don't go higher this week, I'm watching for where we find support. If we look back here to our 1 hour our 1 hour chart here on the E-mini futures, we note that on the 4th attempt, we hit it, we back off, form an inside bar, and then by getting the break of the inside bar and forming another low, higher low, higher low, higher high, high, higher high, higher high, we get that Nike swoosh, where we now have that break, we have the back test, and the confirmation. So I'm not saying that it is a guarantee we're going to get that same thing this week. This is one candle. Is the candle going to close right around the 50 MA? Are we going to open up strong and close soft? Are we going to open up soft and close strong? I'm not 100% sure. We also need volume, but technicals tell us that by closing at the high of the week and with momentum building up, including FOMO and all these other indicators, I'm very receptive to a move higher. There's one more thing which could be a huge thorn in the side of the stock market this week, and that is on Thursday, if the U.S. will hit its debt limit. Meaning, are they going to default on their debt? Yellen is warning that they have to take extreme measures to try to avoid this crisis. And after we get through all of that in big tech, they're all going to be reporting right around the next FOMC meeting on February 1st, which is when we're going to hear from Jerome Powell. And with the messaging from Williams and Harker this week, after a flood of Fed speakers last week, I really want to pay attention to what Williams has to say, because I think he's going to provide a proxy for Jerome Powell. So without going too much further, on a weekly perspective, that is what we're looking for on the market this week. I think we might get a test of the 50 MA. How we react to that, we will find out as we do our daily videos. And one more time, if you haven't already, I would really appreciate if you could smash that thumbs up and consider subscribing to the channel if you haven't already. If not, I wish you all the best of luck this week, and I look forward to seeing you in the next video. Thank you so much.